Hello everyone, my name is Shannon, channel's called Ethernet Wing, and today I'm going to give you guys another Quant Connect tutorial. In this video, I'm going to be doing something a little bit different. I just realized a little issue right there. That should be minutely data. Anyways, in today's video, what I'm going to be doing is I am going to be showing you guys how to make a very basic order flow strategy. Now, if you've been watching me for a little bit, I've always hinted to order flow strategies being better and superior, and that's the edges that I personally focus on in my own creation of products. I have algorithms I call the card counter, and I optimize them for different assets, and eventually I want to make it a service for people that could pay me a little bit and get to use the card counter of whichever one they choose, and you can't sue me. That's basically my goal. But in the meantime, what I'm going to be doing is making videos for you guys so that way you guys can get ideas as well. Because I don't want to beat you guys, I want to work with you guys. So, in today's video, I'm sorry if you can hear my dog barking. In today's video, what it's all going to be about is market delta. So, I'm going to pull up Paint real quick. And I'm going to try and explain it really easily. The black line is going to be price. So I gotta dot that I correctly. So let's say that this line is price. Okay, we'll draw that. And actually, you know what? I'm gonna back up and I'm gonna give you guys a little bit of information about delta. What is market delta? Market delta is the difference between either the bid and the ask size, or the ask and the bid size, depending on what your focus is and how it would relate to your particular edge. But the theory is that the total bid size plus the total ask size equals the market participants in volume. And so if you can determine whether there's an imbalance of sellers or imbalance of buyers, you can choose your positions accordingly. So what does that look like in terms of price? I'm going to draw the same thing. Let's say this is not what price looks like ever, but let's say we're regressing, meaning that price is reverting back to the mean, we're coming down, all right, in a short-term way. Let's say throughout this whole block right here, we have positive delta, more buyers, a bigger bid size than ask size. We want to short this. Why? We're seeing buyers show up. Yeah, we're seeing buyers show up, but they're representing the sellers. Because, of course, in any transaction, you need buyers and sellers. So when we're regressing like this, an inflow of buyers will represent the sellers. Now, let's say that we see, well, the price wouldn't really look like that. Let's say we're trending. And that's not how I want to make that. Let's say that we're trending, and somewhere in here we see blocks of sellers. This is something we would want to short, because this represents shares being actually sold because we're trending. You understand? So when the market's trending and we see buy imbalances, we want to short. When we see short imbalances, we want to buy, and vice versa. It's a little weird to think about at first, but it becomes intuitive. You just do the opposite for whichever one. So that's the basic idea. So now, when you make an edge around it, you have to decide, how do I want to determine whether or not the market is in a trend or regression environment? And then how can I make decisions based off that? Before we get into that, I want to go over the code that I already have here. If you followed any of my other videos, you'll see all this stuff get explained, except for one thing I'm going to add in this one. Actually, a few things. But so first thing I want to do is tell you guys that up here, you should import the linear regression model from sklearn. So from sklearn.linear model, import linear regression is what you'd want to type in. And this is actually, the linear regression model is actually free code that Quant Connect put out. So I'm going to put that in the description of this video because it is very useful. I think I change it a little bit because I only trade one symbol at a time. So I change it a little bit and I make it a little bit more suited for that. So that's something we're going to add. We're going to add a entropy moving average. So we have linear regression, entropy moving average, and the delta is what we're going to add. So before that, I want to go through. We have our future here. In this case, it's S&P 500 futures. This is on minutely data, and extended market hours is true. We have our long and short contract symbols. We have our long entry ticket and our short entry ticket. When we come down to on data, there's already a lot of code here, but it's just the stuff that I can explain really easily, and I don't really have to code out for you guys. I'm just going to explain it. So actually, this I could leave this line of code out, but so we're going to use a rolling window to keep the prices. This is to see that we can add data to the rolling window. This is to add data to the rolling window, checking if our rolling window is ready, and converting our rolling window into a Python list. In here is where we're going to put our long and short conditions if the long entry ticket and the short entry ticket is none, meaning we're not invested. This is simple code to make sure that we don't expire, and make sure that we have a future, it doesn't expire. This is to handle our limit order entries. If we have a limit order out there for too long, what this code will do is cancel it and just submit a new one because they don't always get filled. This is the function to short a future. Again, a limit order with short entry ticket. And this is the function to buy a future. In my previous videos, I explained these a little bit more. And in the rolling window futures bracket order video, I explained this one a lot more. But basically what this is every time we enter a position, it'll either set orders to buy them back with 40 points take profits and stop losses, or to sell them back with 40 point take profit and stop loss, depending on if we're long or short. Again, I explained this all in more detail in my futures and my rolling window break of max bracket order video. I would encourage you guys to check it out. It's in the QC tutorials playlist on my channel. So there we go. Now with all that out of the way, what we're going to do is we're going to add some variables up here. So here we go. We're going to need to store the slope of the linear regression line. So we're going to say self.slope. I have a plural on my reference, so I'm just going to make it plural as well. Equals none. We need to set a look back. So self.look back equals 40. It's just a little bit easier to have this value in a variable. We need to make a rolling window. So self.price window. That's the same right there. Equals rolling window. We're going to make it a size, self.lookback, and it will store quote bars. So there we go. Next, what we need to do is we need to make a moving average. So I'm going to call it level, and it'll just be a simple moving average. We're not going to specify what it's for yet. Simple moving average. So I don't care about giving it a name, and the period. Let's just say 60. These are just the numbers I found to be the least volatile when I was making this strategy. Because, okay, now would be a good time to say this. Do not trade anything with real money with this strategy. It's for educational purposes only. I do not assume any risk if you decide to put real money into this. And this will not be a good strategy. This is just to explain what order flow trading is. I'm going to tell you, if you do this, you're going to lose money. Next, back into our programs. So we need to add some functions here before we can do our long and short conditions. One of those functions I'm going to add in really quickly because I already did a video on it. It is, I think, the 4th video in the QC tutorials playlist, but that is Shannon Entropy. That's what I'm going to go for this one. So I just copied and pasted that code, but I'm going to go through it a little bit. We just declare a dictionary, go through our rolling window, and put the prices in this price dictionary, initialize our entropy variable, go through the dictionary, and get our probabilities as the count, the value here, over self.lookback, determine our entropy, and then we get the max entropy, and then we normalize it, and then we return that normalized entropy. It'll be a number between 0 and 1. Beautiful. Now, second function that we need to add, and I go over another way to calculate entropy as well. Play around with this, see which one works best. This is the one that I actually use, so I'm just going to go with that. The next thing that we're going to do is add in the linear regression function. So we're going to say df price lin reg, linear regression, just a short way to spell it, and then we're going to give it self. Now, we need to declare a few variables. So I'm going to say a equals the range of self.lookback plus 1. We're going to say that y equals the closing prices. And I do need numpy in this one, okay. So import math and import numpy as np. So actually I don't think we need math in there anymore, but whatever, we'll keep it. So we definitely need numpy and sklearn. So we got those. Now we're going to come back down. So we have a, y, and then x is numpy.columnStack. There we go. I didn't feel like spelling it. And then we need a list of a numpy array of 1s. So in here we're going to say np.ones, and now we need to be the length of a. And then outside of there, comma a. Okay, I just want to copy and paste it to make sure that I spelled that right, or that I typed it correctly. So there we go. Next, we need to prepare some of our data. So we're going to say length equals the min returned of len x and len y. And that needs to be capital X, I'm not sure what that is. Okay. Next after that we're going to say x equals x minus length. And then we need to do the same thing, and then we need to add a colon after length as well. And then we need to do the same thing for y and a. So I'm just going to go through here. That's not how I want to do it. Y. That's why I haven't. And a. There we go. Next, all we need to do is fit the linear regression model. So it's reg equals linear regression dot fit it with x and y. Next, we need to get the linear regression intercept and coefficient. So we're going to say b equals reg dot intercept and a equals reg dot coef, and get the second one to put the first one. Okay. Next, we need to say that self dot slopes equals a over b, and then we're going to return slopes. I may sneeze, I feel the tickle. Okay, but there we go. That's our linear regression function. The next thing that we need to do is we get to actually make our delta and our entropy moving average. So right after closing prices, what we're going to do is we are going to say delta equals self dot future dot ask as size minus self dot future dot bit size. Next, we're going to say self dot level dot update, and we need to give it the time. That's just a quantum thing, and Shannon entropy. There we go. Now both of those are ready to be used. And okay, now all we need to do is make our long and short conditions. So the first thing that we're actually going to do is check and see if we're not doing anything for a random walk. if the linear regression equals 0.0. Because if that's the case, we don't want to do anything. So if self.price equals 0.0, what do we want to do? We want to do that. If we're invested, liquidate, and we'll give it a tag for random walk. And then we need to say self.long entry ticket equals none, and self.short entry ticket equals 1. There we go. If one of them was already none, it'll just do nothing. Don't have to worry about this. Or I'm just gonna turn. Actually, I want to put that all in the same line. It just looks a little bit better. Next, we're gonna say else if price linear. We're gonna do regression mode first. So if price linear regression is greater than 0.0 and self.Shannon entropy is greater than our level, self.level.current.value, don't forget that. This is our regression scenario. So if delta, it's not a self.variable, if delta is if delta is greater than 0, meaning that there is more selling than buying in this scenario. At least that's what the data shows. You actually want to buy in the future. And we're going to say elif and we're going to spell it out. But there's only, actually it could be equal, but that really probably won't happen. Or the delta is greater than 0. What we're going to do is we're going to short a future. Okay. Next, what we want to do is we can actually just copy that and then paste it, and then just basically flip the signs. So if linear regression is greater than 0 and entropy is low, and we see a bigger bid size, and we see a bigger ask size, then we can do this. And now I'm actually going to explain this a little bit more. I'm going to add some comments. I hope that explains it. So yeah, there you go. When the delta is greater, when the delta is positive, there's a bigger ask size than bid size, and when the delta is negative, there's a bigger bid size than ask size. That's why we're checking it against 0. So there we go. I have it set here just for a year, and oh yeah, one other thing. This is a file that I tested just with the linear regression. And I had it log the data just so you guys could see what kind of outputs you were getting. This is why we're just checking it against 0. It's either negative or it's positive, really. I haven't found anything if the mass of it, like -7, -6, -2. I haven't found anything if the size of it actually matters, but yep, that's what it'll look like, so that's why we're checking it against 0. So now you just want to build and backtest this, so you guys can see how it would behave. If there are any errors, of course, I'll fix them with you guys like I always do. Okay, no, got it first try this time. Last video was a nightmare if you watched that. And it shouldn't take too long. You guys should get to see it go. I have no idea if this will be a good strategy. I don't think so, but if it is, it is. You're welcome. If not, I already protected myself. But yeah. And actually I want to show you guys what the exposure would be. So here we go. Here you guys can see how we're either long or short the whole time. The bracket rotors are doing their thing, and it'll just pick. And it looks like it's not arbitrary with the price of the market, which is nice. Like right here, we were just wrong. Right there, we were just wrong. Just wrong. There, we got it right, you know? It doesn't seem to be too bad, doesn't seem to be too great, but yeah, I'm gonna let this finish, that way we can analyze it a little bit more, because I have it set to a 1-to-1 risk to return, so we need to win more than 50% of our trades to be in profit. Okay, that should be go green. So we won 3% more trades than we need to. Sharp ratio is 0.3. Terrible. It trades 347 times, so we're testing for 2 years, so 252. You can see I checked that a lot times 2. If it day traded, it would have traded at least 504 times, but we trade 347. So a bit of a swing trading algorithm, and that's fine. If you want to make this algorithm even better, just optimize these values and then optimize your take profit and stop loss. And yeah, that is it for this video. I hope you guys learned something useful, and I hope that you guys can get some inspiration to try and make your own little order flow algorithm. In a big, true order flow algorithm, delta is only one part of the equation, but that's for you to go off on your own little journey and find out. But for now, I'm going to leave it as this. My name is Joe Scorsone, channel's called Ethernet Link. I hope you enjoyed it. I hope that you leave a like and a comment and subscribe. If you could let me know what other kinds of videos you would like to see in the future, that'd be great. But for now, I'm going to leave it at that. Goodbye, guys.